Hello. Welcome back once again. Black Dollar Ambrose speaking. Yeah, I want us to look at GU, GBP USD. Yeah, looking at the monthly time frame. Looking at the monthly time frame, we see that the market is reacting at a point of interest because there's imbalances below. There are imbalances below, so the market is reacting at a point of interest. We have, because if you are to see here, the market is in a downtrend, confirmed by this break of structure. So we dive down to weekly time frame. Weekly time frame, what do we have on a weekly time frame? Yeah, on a weekly time frame, the market is still in a downtrend because there are further breaks to the downside on the weekly time frame. Though the market has approached, though the market has approached a point of interest, that is an intermediate point of interest, also on the weekly time frame. And for the past 1 week, for the past weeks, the market has been generally bullish, trying to mitigate the zones that we see above. So that is for the weekly. For the daily, what do we have? What do we have on the daily? On the daily, normally I like seeing on the daily, normally what I look for is as the the previous day's high or the low, has it been cleared or not. That's what normally I refer to on the daily. Me, I'm a day trader, so normally I begin my markings on the H4 time frame, but I first have to see what is happening on the higher time frame because I need to come up with a foundation. I can't construct my house anyway. I need to come up with a foundation. So because this foundation helps me to make proper judgment, because I see here we have previous day, we have the market still ranging in between because the previous day high or low hasn't been taken, so the market is still ranging between. Market is still ranging in between. So now let me go to the time frame where I begin my markings. The purposes of these videos that I'm making is to show you how I do approach my market. Maybe you can also try to incorporate it with your trading style, but this is how I trade. This is how I trade. I combine a lot of concepts into one. So here I have the overall break of structure to the upside. I have another break of structure to the upside, another to the upside. So having had breaks of structure to the upside, we see what does the market want to do. What is the market intending to do? I see here, whenever there is a break of structure to the upside, like the way it has done, the market has to rebalance price, then move up, rebalance, move up. So right now the market needs to rebalance price to the downside. So let's see whether I have some structures that is trying to pull me to the downside, or we have structures that are still taking us up. We trade what we see, but not what we think. Because here I see we have a mini break of structure to the upside. We have this order block that held price. This order block that is still pushing price to the upside. We still have an order block here. This one I've marked. that is still pushing price to the upside. Let us see the confirmations that we have on the lower time frame, on the intermediate time frame, minute 15. In our next sessions, I will show you how I do correlate my time frames. How I do correlate my time frames. How I do correlate my time frame. I want us to look at a case scenario. A case scenario on the 19th of September 2024. 19th of September 2024. A case scenario. Case scenarios, in fact. 19th 19th of 19th of September. So this is a case scenario I want us to observe. Pick something from what I'm trying to show you. This video is just a matter for you to at least learn something from what I'm trying to show. It may not be like the way you like it, but at least you can pick something. So this is what we have. On the 19th. So let us play price. We see what we have. Let's first play price. You see the market structure is still jumbled. The market structure is still, you can see the market is still forming higher highs. So we can see that we have some break of structure. See, we have some, I can see some break of structure we have here. So having had this break of structure, what do I do? Having had a break, what I do first is I pull out my Fibonacci tool to see my discounted zones. This is my discounted zone here. Move this. Then after I mark my zones, I look for the imbalance zones. We have imbalances here. I have imbalances here, so I can mark this as my first point of interest. The zone, the candlestick that is below, that is what I call the demand zone. That is what I call the demand zone. Also, this candle, also there is a zone that is below, because you can, if you have to see clearly, this candlestick also has an imbalance on it. So I have 2 points of interest here. 2 points of interest. So I want to, if I'm to enter this market, before we go there, remember I have liquidity here. This is trend line liquidity. A lot of traders are buying this and putting their stop losses below here. Putting their stop losses below. That is trend line liquidity. So I want to see something happen like this. I want to see lower high, lower low, lower high, lower low. Then I need a lower high to fail. Then a mitigation. Then we can ride to the upside. So let us play price. Let us play price. So you see, price reached our discounted zone and it went above. So this is what I call an inducement. This is what I call an inducement. So that is an inducement. I still want price to come back to my point of interest and tap on it. It has not yet tapped my point of interest. That is another inducement there. That is another inducement. It's a lot of patience that is required. Play price. Aha, it has now tapped. It has now tapped my point of interest. So if it has touched my point of interest, I see this inducement. It was 1, 2, 3. So in this inducement, since there are three, that means this is a trend line liquidity. So I can put my trend line this trend line liquidity. I will decide to call it. I will now decide to call. This is trend line liquidity. This is the first one. I mean, it's here. Then this is also trend line liquidity, and price has cleared it. So from here now, let me go to minute one. Having tapped here, I see which confirmations do I have here. I can see it has even confirmed already, because you can see we have a low, lower high, lower low, lower high, lower low, lower high, lower low. Then we have a break of this. The lower high has failed. Mitigation, then we drop to the upside. So a confirmation has happened. A confirmation has happened. And you can see a confirmation has already happened. So you can see a lot of trendline traders were taken out from here. A lot of trendline traders were taken out. And this is what I call a 3D pattern, a 3 drive pattern. 1, 2, 3 is what I call a 3 drive pattern. So let us play price. Let us play price. Remember my take profit is here. This is my take profit. This region is my take profit. So let us play price. Are you seeing? This is how effective it is. That is how effective it is. Liquidity. Liquidity is what drives the market. Liquidity is what drives the market. So here we have another break of structure. It has hit my take profit, which was here. Then another break of structure. Another break of structure. I pull out my Fibonacci tool from here. Pull out my Fibonacci tool. First play price further, because I need a pivot for me to pull out a Fibonacci tool. Are you seeing how price, that level respected price? That is how strong confirmations are, how strong price can be when liquidity has been taken. That is how strong price can be when liquidity has been taken. So let me pull out my Fibonacci tool now. From down, I pull it up here. So I think I have my discounted zones below the 50. So I remove the fib. So I start looking for zones that are at discount. Here there is no zone, totally here there is no zone, but here it was mitigated. You can see this mitigation. Then here we have an imbalance. There's a space between the 3 candles. So I can mark this as my first. I can mark that as my first point of interest. Then another possible point of interest will be below here. This order block will be my other point of interest. So let me play price. We see. Let's play price. So you see price approaching our point of interest. So here, price is almost approaching our point of interest. So whenever it's almost approaching your point of interest, I go to the minute one and I observe the shift that I've been teaching you. Lower low, lower high, lower low, then a break, lower high to fail, then we dive to the upside. So that is what I want to observe here now. That is what I want to observe. Once price taps on my point of interest, not anywhere, but once price taps on my point of interest. What you have to know is that an imbalance is also a point of interest of its own. An imbalance is a point of interest of its own. So if you are to observe this, I think price is playing at an imbalance. An imbalance is a point of interest because if you are to see here clearly, zoom it, because if you are to see this, in between here, there's an imbalance in between here. In between here, there's an imbalance, also the candlestick, because you can see here critically. If you are to pull it out critically, you'll see something there. You can have as many points of interest as possible. So price has now tapped on our point of interest. We dive down to minute one, we see a shift. We see this, we see a break to the downside, then we see this level has failed, crossing to the upside. So it seems the lower high has failed. Now we have, what do we have? Now the market has confirmed. We can now buy. We can now buy. The market has confirmed, we can now buy. So let us shoot to the moon. Shoot to the moon. This is how effective it is. And also on this, we have, you can see we have a lot of liquidity. This is trend line liquidity. We also have another three dive pattern here, though it never tapped. So this is how effective it is. So let me hope you have seen how effective trading shift of structure is. So I think this is for EU. You can use the concept that you have acquired, not the concept, but the idea that maybe you have picked one or two or three ideas you have picked from here. Then you mix with your trading way. In case maybe you have any questions for me, my inbox is open. You can hit my inbox and we share something, one or two. But most of these setups I make and send to my mentorship group. I make the setups, I send to my mentorship group, we trade together. My mentorship group or the VVIP group, and we trade together. But once in a while I'll be making such videos. If I not once in a while, but if I have time. If I get the time, I'll make such videos and show you something, maybe something that you can pick a leaf from. Something you can pick a leaf from. So I think we can call it a day. In case of any questions, hit my inbox. We discuss a little. I think we can call it a day. We can call it a day.